Here we have the current stock market update for Super Micro Computer Incorporated, stock ticker SMCI. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders will be able to find this information more easily on the platform. So as we can see here, we're looking at the 4-hour price chart and the stock continues to collapse. Overall, a lot of this negative sentiment is being driven by the newest antitrust probe that's being conducted by the Department of Justice, DOJ, in connection with the possibility that NVIDIA is engaging in monopolistic practices. This has sent most of the technology sector lower and in the downward direction continuously here. And we're seeing several examples of companies that have actually posted very strong earnings reports and yet are still seeing negative selling pressure. So that's not exactly the case with Supermicro. We know that there are other factors involved here. So what we will be doing in this video is looking at some of the important price zones, which can be used to hopefully outline some profitable trading strategies for this stock going forward. So what we're currently looking at here is a new price low that comes in at roughly 382.88. Of course, this does break below the prior price low of 395.16, and all of this activity breaks below the initial near-term low, which came in at 478.56. So as we can see here, there is a succession of lower lows here and lower highs, which does fit the textbook definition of what would be considered to be a downtrend. In addition to this, we have to look at the share price activity as it relates to the exponential moving average cluster. Currently, what we're looking at is a share price movement which has remained consistently below this entire series of 4 moving averages. We have seen small situations where share prices did get a bit of a bounce, breaking above the 20-period exponential moving average, but most of this activity was occurring before the Hindenburg report, the short seller report, which accused Supermicro Computer of engaging in manipulation practices with its accounting figures. So we have since then seen a response from the company, but this isn't doing anything to help the stock sort of rally here from these lows. At the moment, I do think that a lot of this activity is being based on the NVIDIA accusations and just sort of the broad widespread contagion that is being directed at technology stocks. I've done videos on NVIDIA, Broadcom, and Tesla is coming up next. So I do suggest that people take a look at those videos because it is important here to understand how the broader market is working because this is really what's going to give us a sense of whether or not these declines are over near term. So as things currently stand, the prior price zone that we have been pointing out for this stock that as a potential movement to the downside is right around current levels. If we go back to the prior price high, which was posted in the middle of January of this year, this is the price high which would have occurred just before the major breakout that the stock experienced, where share prices themselves were actually able to move into the 1229 region, which seems unheard of at this point. It almost seems like ancient history at this point. So, and it really wasn't very long ago. I mean, we're just talking about the early parts of this year. So, if we look at the breakout point for that rally, we can see that it comes in right around current levels. So there is a lot of downside momentum and a lot of downside volatility here. However, a break below here would be very, very important from a longer term perspective, because this would suggest that the potential for support to be found in this area is now eroding. So, this stock was really starting to look like a potential buy on dips here until this NVIDIA report came out. And then we just saw extreme declines in NVIDIA stock, which is now testing roughly $100 per share. So at the moment, it's a bit difficult to see, this boat turning around here. It's sort of like a battleship having to turn around. It's a little bit of a slow process here. There is a huge amount of share price momentum that is being focused in the downward direction. If we take a look at the indicator reading, we can see that all of this long-term share price momentum, negative bearish momentum in the downward direction has continued to remain valid and hold in place. So there's a lot here that's showing on this chart, which does suggest that share prices are going to have a very difficult time gaining traction here. Of course, that does not mean that buyers are not going to start to step in somewhere at these lows. And if we're talking about Supermicro, we know that this is a stock that has a very long history of extremely volatile trading activity, which can often lead to erratic trading conditions. So, calling tops and bottoms with this stock specifically is more challenging than it is for stocks that are less volatile in nature. One thing that we can point to is the fact that there is still, an emerging suggestion that an uptrend in share price momentum is starting to build here. If we look at the indicator reading on the bottom of the price chart, we can see that share prices are currently trading in oversold territory, and then within that movement into this downside region here, we're starting to see a small uptrend that starts to develop. Of course, this pales in comparison to what is seen from the longer term perspective, because it is quite clear at this stage that the share price has been facing downward trend momentum and bearish divergences ever since the share price posted prior highs toward the middle of February, coming in at 1078. And this is even prior to the all-time highs. So, this is a huge amount of share price momentum. This is a massive, pattern here that is influencing the stock from a more long-term perspective. But what we can see here is that there is a bit of emerging upside that could possibly start to turn the tide near term. I do think that currently we're going to need to start to see some buying activity in other parts of the market. We're talking about the stock benchmarks. We're talking about Nvidia. Even stocks like Broadcom, which just released earnings, and those earnings were favorable. We're going to have to start to see some buying activity in those stocks before we can reasonably expect Supermicro to start to make a recovery here. These near-term lows also have to stop posting. So what we're currently looking at as far as a near-term high, what would actually take pressure off of the downside? So one area that we can point to here would come in right around 475.42. This is a short-term resistance zone, and it works just before it comes into play just before share prices would be moving back into this share price gap that was posted earlier toward the middle of this month, last month I should say, roughly August 22nd. We did see a share price gap start to develop here. So if we did see a break above 475, this would also put us back into the exponential moving average cluster, and then the stock could benefit from some potential upside momentum that could be generated by this gap needing to be filled. So this is currently the area that I'm watching to the downside. Other than that, we are going to have to start to look at standard deviation channels and things like that in order to start to identify potential support zones to the downside. I'm not ready to do that just yet for this stock, because I think that what would need to occur first would be some evidence that this near-term uptrend in share price momentum is able to continue. So here's the current market update for Supermicro Computer Incorporated, stock ticker SMCI. Our high-value trading strategies membership is currently available for a limited time for only $9.99 per month. These high-conviction investment strategies are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.